Hello, hello. Welcome to another ES Futures trading stream. Today is Friday, March 28th. It is 8:50 a.m. We, or the market yesterday had an incredible and unbelievable short cover rally. I hope you were, I hope you were, you have seen this because this kind of how can I say it? It doesn't happen that often. These kind of days we have a trending day to the upside, and the condition for these kind of days to develop are not always clear. Like it wasn't clear at all yesterday. There were odds that there could be some kind of short cover rally yesterday, but the extension of this short cover was unbelievable, man. It was something just unbelievable. Um, I was thinking, I was thinking that I guess I can use my daily charts to see this, to talk about this. Is I was thinking that uh, naked put sellers were in trouble yesterday. Probably there were a lot of naked put sellers that were selling maybe these puts just below this or maybe these ones. And the end of the month, I'm not talking about yesterday's, but the end of the month, which is today, when the market, they sold somewhere around here when the market was way up here. And this is a distance that seems far for the way how the market was reacting, was trading at this moment in time. And that strategy, we often talk about that. This is what's it's a terrible strategy to have. I think it's one of the worst strategies out there that can be out there, because it's very misleading. 70, 80% of the puts, I mean, of the options, uh, and worthless, close worthless. That gives you a high rate of wins, high rate of wins, high rate of wins. But the wins are little, the wins are small, and often, when you are up here, when the market is up here, these puts are very cheap, very cheap. To make to cash 200, 300, $500, something like that, you have to sell a lot of options, right? Not one or two, maybe 10, 12, 15, 20, something like that, to just cash these ones. And especially doing, when the market came up here, for example, just 2 days before just 3 more days to go, and the market's not going to come up here, come down. And that's the strategy. The strategy calls for where the market won't go. Okay, where do you think the market won't go, and you sell that. And this is really bad. They don't consider anything there, right? Just playing wishful thinking, and the fact that you win a lot of times gives you a false sense of confidence. Um, I think that has a lot to do with what happened yesterday. After, for example, after the market came down here, these options could be very well underwater here, and since a lot of margin calls here, and the next thing, when the market is down here, look how far this is. It's really far away. Just one more day to go, and that's it, right? And the opposite thing happened again. I believe that has a lot to do with what happened yesterday as well. On top of how the market was really short. We have this 3 days range here, big break to the downside here, and the market seems that never was going to stop selling here, and we got a short coverage rally yesterday. It took some time to develop. maybe like 4 periods. I guess when the morning stream, yesterday's stream was over, the market was around in between these two levels. I was looking actually at this base or spike. The overnight spike was bought from exactly the half back. Um, and my upper reference was closing the distributions. And the expectation is if what you expect to happen doesn't happen, then what's next, right? What's the opposite thing? We were talking that there could be two trades. One to the upside that could trigger a huge corporate rally. That's what we were talking. And the fact that this buying came, I mean, not that one, but this one came from exactly the over hardback. But the market was too short. The market re-entered previous day range 2 times, right? One, 2 times. A strong market doesn't do that. Okay, and it came back another time, and the second time or the third time it came back, it ended the trend, the upside trend, the early trend actually, but it couldn't take this one. It gave us it left a weak low down here, and from that moment on, not here, okay, but it happened around this area. You could see it. You could see what was happening because the way how the market was trading, the tempo, the pace of the market changed it here. Changed it here. You could see that this market gained speed, gained momentum. All the traders, all the shorts that were praying, that were trapped here or trapped here, you know, they just throw the towel. This is here in this part here. They were throwing the towel, especially the market came down. I guess the first thing the market make this one, let come down here. I mean, all the things that we will that the market has to monitor for continuation were there. A little test, and off we go. And the trade was super emotional. Just imagine what happened here. How many distributions yesterday has? One, two, three, four, five, six, 7 distributions in one single session. And traders also, or the market was coming also from a couple of days, back-to-back days, with big tech earnings that took the market higher after the release of the earnings, at least in the overnight. And that's another thing that was adding to the pressure, adding pressure to the upside. Now, I am not going to miss this trade. This market is going to go higher. I want to be there when that happens. Add to that the short being squeezed, right? That was the situation. And the market at the close, you could see kind of like started getting weak here, but man, it was unbelievable. This it was just unbelievable how this market uh, rallied yesterday. There was a gigantic short squeeze here. Oh, and the thing is, it's end of the month. These kind of things, weird things happen at the end of the month. Weird things can happen, not happen, but can happen at the end of the month. You know, not every single end of the month ends on Friday. You see that? So not all of them happen on Friday, for example. So you got end of the month options, you got end of the day, you have end of the week options everywhere, all over the place. That's another, yeah, catalytic call, if I can call it, that is there that can 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 trigger something, right? Um, the market yesterday, look how we ended. Look where the market was bought here. You know, this high was just so close, man. That was so close. This high here, so close. The market has traveled such a long distance that I have to get over there. Just imagine the trader thinking it's just so close. I have to. and they keep buying here, buying here. Amazon took this high out in the overnight, and inside bar, and just inventory was too inventory. I guess I guess the market has a good. Market gives left a non-excess high here, non-excess high here. And remember, we also have this ultimate all-time, no all-time high market high made in the overnight. But I think it's too long now. Being long in this market right now is extremely risky. Yeah. The overnight has a move. And look about the market the overnight session is doing. The overnight session is going lower. There's a lot of short inventory here. Where this short inventory is coming from? One, two, three, four, five, six, seven. Seven times coming from seven. All of this inventory is coming from a mechanical level. There's a lot of stops here. Lot of stops here as well. Lot of stops here. This is a known. This is a known. This is an action that didn't end yesterday. The market just went too long, and I believe there is still more upside here, but I think the market has went just too far, too long, too fast now. I don't have interest in doing anything in this market right now. I think the risk is very high, even though the VIX is, yeah, look at the VIX. It looks less than 17 now. The VIX is supposed to be a index that reflects risk, but it doesn't do that way. We do have FOMC on Wednesday next week. We have Apple on Tuesday next week. I don't know what else we have next week. I think those are the more relevant. ISM. We have CPE today. We already had unemployment rate. This is, oh yeah, non-farm payrolls Friday. This could be something interesting there as well. This is going to be a really interesting week next week as well. And we have CPE today, 8:30. Market didn't do much. It came back and I keep selling now. I found another mechanical level to sell, March high. We know what March high is. And after all of this movement, after all this craziness in the market, after all of this volatility, look where the market is at. It's back at this level. It's right there. The market hasn't done anything. It can very well end this within this narrow range. Right. The 4200 doesn't seem that far now. It was very far yesterday, right? It was far here, and this one even farther, this low. The monthly hasn't changed. There's no change in the monthly. It's still this is still a narrow bar hovering around the go no go level, the decision making level up here, which I call it the 4140, because it has been sold multiple times from that level. Not a single time has been bought from this level up here. Okay, now let's check the weekly. There's no change in the monthly, right? The weekly, we were talking yesterday how this market has prepared this week low here, take this one, came back inside this range, inside previous range. It took the low, the range, it looked below, and that it would be an unbelievable, right? Really unbelievable thing to happen if the market comes back up to here. Just to check, because and the reason why I was saying that because it's just 2 days in session. It would be a really large movement, a rejection of the breakout to the downside, look below, and rejection, with the destination trade being the opposite side of the range, which in this case is the 4200, 4190, 4194 or 96, 97.5, something like that. Very close to the 4100 is this high. And above this, we have the 4208, which is the low of the gap, and the closing the gap at 4220.75, something like that, right? I was if this was if that happens today, that would be an incredible. That's a really incredible thing, right? It would sign. We were talking that how this would be a sign that a really strong market, a really positive sign for the market, even though all the things that are happening around. Okay? Because before we go to the daily, because we have bonds trading range as well. The risk, look at this, look at this, look what we have. You know, the same thing that happened here yesterday with this weekly range. Look at the daily range. Look at this range that the bond market has. One, two, three, four. Four times has been bought from one specific level, very, very narrow. You can put a line here and get all these four lows. And what this market has below? Nothing. And why I'm looking too much at this? Because this has the potential to move the markets really, to drag the market uh, really really low if this happens, right? Because there is nothing here. This is short covering here. All these shorts have been forced to cover here, and these ones short covering rally here. There's no extension to the upside here. And look at what's happening with gold. In the other hand, the gold is having the same thing, but one, two, three, four, five, six low. This is dangerous for this market as well. Market has made a new high, one, two, three highs, one, two, three, four highs, all-time highs, and it is rare that this remains there. But it's becoming weaker here. This short covering rally that happened here fuel, just push the market hard enough to make a new high, but has left. It has some upside extension, but these lows are not that good. We have this range here that has not been taken out yet. It's been bought from this low. Look about this below here. Below there's nothing here, and below these lows also there's nothing here. This is quite dangerous situation here. Basically trading on fields, or I believe on fields of recession here. All right, let's go to the daily now. The daily, we have, this is what we were talking. Now we have this range, 16 or 17 day range, something like that. Let's call it 18 now. 3, 6, 9, 12, 15, 18. Oh, wow, 20 day range. Is it 20 days? I thought it was 17. 3, 6, 9, 12, 15, 18, 19 days. Wow, 19 days. Yes, I had to correct that on my horror because I was writing 17. Oh no, I was writing 18. My bad. So it is 19 day now. And look how this market looked below, and this breakout was rejected. No, it came back just below the breakout, the initial breakout of the that we have. This is also weekly. This is also this weekly is this one here. We have weekly fails, and then another one here. This 4082, and this is 4070 something. Okay, but the thing is, these two levels, right? The action here is the breakout was rejected. Downside continuation could have taken the market all the way down to here. It did not happen. It did not happen. Yeah, all of these loans here are now out, have been removed. All this weak inventory has been removed. This was an opportunity for another traders, maybe stronger traders coming to the market. That's the observation the observation that I have looking at this. Okay, a deeper look, a deeper look can clarify that. We will see what happened when we look at the market profiles. Now, for rejection, market was bought mechanically from the breakout level and destination trade the opposite side of the range. This trade, when the market ends one time framing higher here, the destination first was this, you know, this range here, the 2-day range here, because it was an inside bar. It took it out, gives a weak, extremely weak level here, and now we start and that target this low here. It took not just this low, but the whole range as well. Now, to complete this trade, the potential destination is the opposite side. Can it do it? I think it can do it, not necessarily today, because that high is very close to 4200, and also there's an overnight high. The market high was made in the overnight, and markets don't really leave a high made in the overnight before it breaks. It doesn't happen that often. Right? Um, we saw that this is a mechanical buying on also, you know, it was bought exactly from 50 moving hours. Right there. There's not. This is not good. We are starting to see some weakness in this rally. And you see, so it's not as strong as it looks to begin with. It's not as strong. Now, let's take a look at the market profiles. Market profiles here. The market took this level out. Right? It Where this market has been bought, man. This is I've been just noticing this. Look at this where this low was made. No, this is a nuance here. This is gonna come an anomaly. No, no, I won't go ahead and call it an anomaly. But this is something that traders can see. This level here. I am just noticing that. But before this, what I pay more attention was to this the weekly breakout level here, 4070. I'm making uh, consistently high volume at this low. I didn't like the fact there was high volume here at this low at the time. We have a weak level here, coming exactly from previous day high. Nothing here to support the market. Weak level here. The same thing that we had here yesterday is what we had down here, or something like that. Is it? I don't know, but there is something here. That's why I left this. My bad. It was I'm wrong. There's something here. I don't remember now, but there was something here at the time. But that's why I leave this gray line there. Exponentially weak pullback low. Why I call it exponentially? Because I think that this is a non-excess low here. Gap high, non-excess low. This is irrelevant now. The 4,000, another non-excess low here. Now the action to the downside has not been completed yet. In the same way that the action to the upside has not been completed yesterday, because I think the market will get just too long. It needs to break before it get really high. There's another non-excess low here and the market high made in the overnight session. All right. And we also were talking about the center of the range. This is the center of the range. There's nothing there, but just look at what look at where this the overnight session was bought from, right from this level. Now we're having a rally here. Overnight inventory was short, being sold exactly from zero. We have a non-excess high there from yesterday. We also have the non-excess high from April 23rd. This one, you know, there are references on the upper side that favor the upside continuation, but I think the market has got just too low, right? My main thing is what I have in mind is we have FOMC next week, next Wednesday, and this could have been just traded, these big companies, kind of rebalancing inventory, repositioning themselves just in front of FOMC. There could be some hedge going on. Remember when somebody buys or somebody hedge, they could buy options, and they don't buy one option, they may buy hundreds, thousands of options because their portfolios are very, very huge, right? And to do that, the market makers, and I mean, to hedge those the selling, the market maker has to hedge as well, right? To hedge the hedge, because what happens in the market maker sells just 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 the option, they can get crushed, right? They need to hedge, and to hedge, how do you hedge a put? You sell future. Right? And that kind of pressure that can there's something that's something that can happen that goes on in these markets, right? It doesn't happen all the time. It is end of the month, FMC, there's a lot of things going on at this moment. Maybe the next month, next end of the month is not going to be like this. I don't know. Let's check what date. For example, just to start. The next month, which is May, end of the month again is Friday. There could be something there as well. It's Friday. Oh, my bad. I was checking March. Oh, I should check May. Now, next end of the month is Wednesday. It's different, right? It's not Friday. There is only daily expressions and end of the month right there. So don't expect the same thing to happen twice, or not twice in a row, but happens all the time. But it could be a factor. I'm not saying that. I'm not saying that is what happened. Now, the overnight is, I think, short, very mechanical shorting, uh, shorts in this market, very weak hand traders in this market, because you can see there where this all this selling is coming from. It's coming from sell, exactly from sell. Market open in the overnight, there was a little sell off, came back to sell, came back to sell, came back to sell, multiple times to sell. Right? Very mechanical selling there. And What the plan is for today, I actually don't have anything for today, anything planned for today, because I consider the risk in this market right now is very high. It's very high. I like, I would like this market to try sideways to remove some of the, well, or at least to maybe close some of the distributions and remain in the upper half, at least remain in the upper half of of yesterday's session. So just to have some rebalancing happening there in front of FMC next Wednesday. I think the risk is very high for my take. If you want to learn more about market profiles, I am not a market profile trader. What I do is I use market profile to analyze the market, to see what is happening, to gather information. Market profiles are just a way to gather information. I was saying if you want to learn more about market profiles and another way to see the market, I suggest you to go to check Jim Dalton's. This is, I think, I was talking to a friend that he said that I thought that this was not Jim Dalton, but it seems like it is, or it was Jim Dalton uh, before he has his other one under Jim Dalton Trading nick username. But the webinars that were finding are very interesting, very good ones. He has become better with time. This is from 7, 8 years ago. He has become better. He has improved his way of teaching, which is just logical after doing the same thing over and over and over. And it is perfect valid for every time. I keep coming back to these videos every time I can when the market gets stuck or gets stuck in trading and trading and start trading in ranges. For example, I see nothing in the market. What I do is I start rewatching these videos. There's a lot what you can watch. You also have his latest are here under public webinar. This is his website, and there's a bunch of them here. There's just a bunch. If you wanna, everything is in here. If you wanna learn about trading, about markets, you will find it here. But also, um, yeah, I mean here when I'm here is YouTube, right, or the internet. But also you will find a lot of crap. A lot. You will have to filter a lot of information. You will have to go through a lot of things to find what I consider is the right thing. Right? Um, why I don't give too much relevance to another ones, what I don't talk about uh, about other ones is because the other ones don't put price in context. They just create momentum and the rotation of the customers is, of the people in those they have really high amount of views or customers or clients, but the rotation is very very high. When the rotation of your customers is or your employees or whatever is very high, it means that the business is not good. The business, if you have a company and um, there's a high rotation of employees, for example, it means the environment is not good. The company is not good. People just don't like to work there. In this business, it means that there's a high rotation of customers. It means that just customers don't last. They just drain their accounts really fast, and they take one shot, and that's it. Right? They don't give you the opportunities. They don't teach you. You don't learn um, tools, because there's a set of tools that you need to have in order to have just an opportunity, just a chance, and to learn or to do something here in this business. Just that. And everybody promised you, everybody out there except him and a few others. I, I consider really few others uh, promise you uh, wings. No, everybody promise you any course, any courses, any no course, any courses, any chat room, any platform you want to be member of. They will promise you, huge wins and a profit, make a living from this business right away. And he's the only one that I that side is tries to face. It's not like that. I cannot promise you that. I can promise you, and the same thing that I'm trying to do here. Huh? I can promise you that I will do my best to teach you, to give you, to put you in a position that you can develop your own strategy to at least have a chance. And this takes time. It takes time. It takes at least two years to just to have an idea of what this business is about. 2 years. If you think you are going to make something in 2 weeks, I strongly suggest to look other way, because the odds that you have any kind of success are very low. You are just having you know, or are taking high risk without even knowing. All right, let's go back to the market. We are just a couple minutes from the opening. As I say, the market, the overnight inventory is short. Don't I am not particularly interested in this trading day, even though there is a possibility there. We have that non-excess high from yesterday. This non-excess high as well up here. Couple minutes. At least I have too much days here. Let's do it only. No, not here. Okay. We are interested in only those two. Let me remove this mount. Yesterday, 1, 2, 3, 4. No, I guess I have to keep this. Otherwise, I won't see this high. And the market is going to open inside previous day range. Opening inside previous day range. Advertise chop. Increasing the odds of having a rotational market. If you have any question, please let me know anytime. Alright, Mac is open. Counter reaction to overnight short inventory is a rally. This high is not good. Exactly at POC. Slightly, just slightly higher than yesterday. Come on, man. I don't like this when this happens. No, but chat's not going to open now. Come on, don't tell me. Don't do this. Oh, did I close it? Yes. No, it's frozen. Yes, I closed it. Alright, that high has been taken. Let's go back next reference in the upper side saddle. Long inventory in the market is extremely long. This low has been repaired, and yesterday, we have, the possibility it's also a sequential trade at the closing. The market could take this low first, and then this high after, or this high first, or this low after. Non-excess here, non-excess, mechanical low, mechanical high here. So what is the current business now? Current business could be overnight short inventory, and that, correcting the overnight inventory favors actually 5% upside movement that could take this high out and also this one out. I need to take a break. I'll come back in 5 minutes. All right, I'm back. Look at look at where this sailing is coming from. Exactly from zero. Hmm. I think the market has two business to do here. You know, part of the first one is removing or counteraction to overnight short inventory, almost mostly short. And now from the overnight, remember we were saying that we were talking that there was a lot of selling coming from this level from the seven. 1, 2, 3, 4, 5, 6, 7. This one, this have not taken all these shorts out, and now it has added. You know why I is important because this is a mechanical reference here. Everybody knows or sees saddle. Everybody knows where it is. There's a lot of stops here. Now this market has added more stops here about this area and this area here. And this kind of trades, oh, sorry, this kind of fast trades, usually just are aimed to gain a couple ticks, couple pointers, and that's it, right? This uh, it is a very mechanical trade, but you know, it's a fast trade here. Boom. You just get to settle, boom, put your stop one tick above, and that's it. And then boom. And I don't like I don't like this the long side at all because I consider the market is extremely long. It's very long. But I don't like the short either, the short side either. It's very risky, very mechanical thing. And I think there could be some potential to the downside if I think maybe the market can take. I think the market has looked this high here. Was aiming to this high yesterday. May took this one, and possible this one as well. Just try to feel the emotions here. Can you feel, what other traders are feeling here? They are coming from a day that the market never look back, right? And never once the market pick a direction after this, and the CC movement here when the market was trading back and forth inside this single prints. Once it picks a direction, it never traded. It never put in danger their positions ever. All day long going to the upside. Never, you know, they were safe yesterday, but that's an unbelievable long distance yesterday. That was short coverage. Another reason, one reason why I say short coverage is it doesn't have volume. And the volume has decreased actually. That's why I say short coverage. The multiple, there's very emotional day yesterday. And now we are just having a continuation of that. We have this magnificent short cover rally yesterday. We have 100 points. How many points? Like 60 points yesterday. And we are going to have another 60 points today. We are going to take the 4200 today. So we'll do. Okay. I'm not saying that it's not possible. The only thing I'm saying is the risk trades are taking now is extremely high. There are still some things here. Non-excess here. Do you see how seller was taken? Seller was taken here. Now we may have more here. The upside has not ended yesterday. We got another non-excess here and a weak high up here. After this, the next reference is the 4200. More concrete, the overnight high, a market high made in the overnight, which is pretty much the 4200. Okay, the market traded through this reference in the overnight, but the overnight does not repair this high. There's still a lot of stops here and a lot of stops here. This is not big money here. And not traders might think, oh, okay, the market has moved long distances, and now this is big trading, big money coming into the market. I highly doubt that. Because if you are, just imagine this, if you are a big, if you own a big trading account or big trading firm, all you want to do if you want to place your position, you want to enter the market, you want to enter with this, you're not going to enter one or two positions here. You will enter big position. To enter a big position, I don't know how much, hundreds, thousands, whatever. You want to be as close as possible. You don't want to enter here and end up with average price up here. As close as possible. And these kind of movements, are very emotional. And the same way as you don't want to kill the market when you're selling, you don't want to go crazy when you are buying. You just, you know, your position has high risk. If you start feeling your trade here, for example, and end up buying up here, that's just not the way how these people or this kind of money trades. All right, again, we got another level here. Very emotional trading here. Still taking high risk positions here. That high is not good. Not good at all. Now we have an exponentially weak high. This was weak, non-excess, and now we have this one coming from this level. Okay. Guess what do you have here? Stops, right? What do you have up here? More stops. Weird things can happen at the end of the month as well. Please let me know if you have any question because I don't have too much to say. No, I I have assigned high risk. I gave the market high risk. I think the market has really high risk, especially on the long side. That's not enough reason to short the market for me. So I just step aside. Just want to watch the market and see what it does. First things first. What the market has to do first is deal with all business. What's the current business the market is doing now? What's the current business the market is dealing with at this moment in time? I think it's overnight inventory, overnight short, mostly short inventory. I think traders are unaware long traders taking long positions here are unaware of the huge amount of risk they are taking by going long in this market. I consider risk in the long side is extremely high here. Very, very high. Mm, it seems like volume is going to be about the same as yesterday. We still have about 5 minutes to go, and should be here just to be even with yesterday. I think Michael can make it. What is the bigs? Bigs keeps dropping, man. Bigs is dropping. Bonds are rallying. Both are going higher. Gold is rallying. What's happening rally? Look at that high, man. Gosh. Vamos a ver. Let's see if the market can take this high here. How good it does. It's just taking too much time here. Is the market going to give us a spike here? I think what favors the long side is the high that we have now, the support high, and the non-excess high from 424. Traders are pushing this market to the outside. Can you see what they are doing? They saw the market rallying yesterday, and we are going to move this market higher here. They may have something, you know, maybe even up to here to this area, taking this half back, this high out. That's not a good high. What happened I have here. Also, it's not a good sign We know that inventory is extremely long, and this is not a good sign for the longs as well. The market is just taking too much time to take this high out. That's not good. That is not good, not a good sign for buyers here. Look where the market is now. Yesterday it's high and sell. Uh, Man, I find sleep here. What do you do in this market? Any idea? Are you long? Are you short? Are you short in the market? Now, what would you short a market that has value at the high of yesterday? On the other hand, why would you go long in the market that's extremely long, where the risk is very high? Okay, look at this one here. This is 41.55. This is also really high volume here. I'm going to remove this level. Look at this, 55. Now we have stops from this period here, stops from this period here, stops from this period here, stops from this period here. Huge amount of stops here. But remember, the market is very long. Most of short inventory has been removed, has been squeezed the hell out yesterday. There's tremendous amount of suffering, the pain that was inflicted in the short yesterday. I hope you have not been short in the market yesterday. You know, and if you know that that could be short covering, that the potential actually is to the upside, why we short the market, right? And that's market generated information coming to help. kind of you can use that kind of like to combat, to neutralize the bias that you may have, that one may have when you see a market going lower and lower and lower and lower. Remember today's end of the month. Today's end of the month, and there's a lot of puts expiring today as well. I suspect that there's a lot of stops around that or above the market high, or at least above this 3 day range here. One, two, three. There's going to be a lot of stops here. All right. What is this low here? 43, 63 could be. What is this low? 53. Come on, no way. 43, 53. Don't tell me you're going to stop. 63 and the next one 73. Just up here. Yesterday there was just short-term traders here in the market. Then it squeeze. Both non-excess highs had been repaired. Okay, those two highs are being repaired. Technically, this one is still it's kind of like not too much here, too much excess, but excess anyway. To have 4 ticks, 3 ticks of excess up there, just enough to be technically good here. Next reference, monitoring for continuation overnight high followed by 420 high, which is I labeled as a weak high. Okay, okay. Oof, look at that. That has been taken. Oh, this is momentum trading. There are no. I think the amount of shorts here are very low now. There could be some stops up here, especially of naked cold sellers that could still be in the market. I mean, if you sell some options, some call, where you would put your stop here? So which would be your strike? Probably 4,200, right? And just the market came this long to the downside. You won't believe it. No, the market is just too far, right? It's too far. The market is not going to come back up here. It's impossible. And now they are underwater now. The closer it gets to this area, the higher this market goes, even if it goes over here, the more nervous, I mean, the deeper they will be in red, right? The deeper will be in problems. The nervous they become, and when they see this market just keep going higher, higher, they will start to panic. They will start to panic, and panic is what gives us the kind of spikes that we have. I mean, the spikes that we have now. This one spike here, another spike here, another spike here. It's taking stops, right? But there is nothing. If there's nothing here, and we have that kind of spike, that's just short covered. That's just that is shorts covering positions. Right? Finally, right? Finally, leave. Okay, I'm out of this market. This market is never going to stop uh, buying. It's going to, it's going to the moon. It's never going to stop. And when they throw the towel, that's when you have these big spikes, this big upside movement, and and usually that's the end also. You know, there's no more. This panic, emotional buying. Market is super long here. It's super long. Boy, how long this market is. Unbelievable. It just went from this level, the 70s, to up here. Gosh, man. Mechanical buying as well. You know? Look at all this high is bought from this high, this one from Celo. Yesterday we noticed where this market came from around the 4100, the day previous breakout. Very mechanical selling, very mechanical buying here going on. Now this high, it's no good. This is a long elongation here that I have coming from sale. I mean, halfback here. This non-excess high has been repaired. Boom. This one non-excess high has been repaired as well. So they are history now. I don't need those ones anymore to be in the way. This 14, I guess this is a 14 from the aftermarket. There was huge amount of trading here around this 14 here on this day. I think this also are way long gone now. If there was if this was selling, more likely they have covered somewhere down here. All in the way going when the market was going to the downside. Please let me know if you have any questions. It is 10:15 almost. Uh, I think that's it for today. If there's no questions, I guess I'm going to call it the stream and the week. I wish you guys a good rest of the weekend, good rest of the day, and have a wonderful weekend. Enjoy your day. See you.